Well, good evening, all subscribers and invited guests. My name is Jeff Killian, and I'd like to welcome all of you, all traders and serious investors, to the Inside Technician Special Webinar event entitled Trading with Technical Analysis 101. We have an excellent presentation tonight for you, and this is designed to cut right through a lot of the mysticism that surrounds technical analysis, the correct application of it, and how to use it to make real money trading. And so before we begin, as always, we have to run through a quick disclaimer, and we'll get right into the next slide and into the program here. The Inside Technician or any of its principals, employees, or partnerships makes any recommendations to trade any securities in any marketplace at any time whatsoever. The services offered are strictly for educational purposes, and the client assumes all his or her own risk when making any of its own trading decisions when trading any securities within any marketplace. Our educational services are all designed to educate the client in employing the correct application of technical analysis to then be able to make better informed and self-directed trading decisions. And that's really what it should be all about. We have in excess of 82 people in this room tonight, and it's for good reason, as people are looking for something. The opportunities in today's world are exhausting themselves one after another because of a global change in economies, and everybody is looking for a way, a large majority is looking for a way in order to be able to learn how to trade, really learn how to trade in order to survive, make more money, live a more balanced life, more security for their family, right? Leave something for their children. This is what's on a lot of people's minds, and I know because I get calls every day and I listen to what they have to say, and I understand very clearly that they're looking for an opportunity. Now, in tonight's presentation, let me tell you what we are going to run through. We're going to run through a basic but very clear-cut, very time-proven application of the most basic indicators, techniques, volume, money flow, in a very 101 sense, to be able to demonstrate to you that the techniques that we use here on this end, in this fully transparent environment, the way we teach here, is really about the importation of knowledge from one person to another. A mentorship environment. We are doing something markedly different here, as you'll see tonight. And instead of going through another advanced webinar with all the questions and the calls that came in, the idea was to do something basic, because you know why? When you're building a house, you have to build the foundation of the house extremely strong so that it supports whatever type of house you want to build. And in this case, the foundation of technical analysis is critical to becoming a real-life profitable trader. Now, the idea behind technical analysis is to quantify high probability trades on this end so that when you take them, everything has been pre-calculated, predetermined, so that you limit your risk to a minuscule amount of money and make as much money as humanly possible in a short period of time and then get out. And the reason why is because everyone knows who trades for a living that patience is your greatest positional advantage as a real trader or investor. And letting the trade come to you and not chasing the trade. This is the marked difference between a professional and others that are known, as we understand them, people that we take our money from, the market participants, the herd mentality. So let me explain. The correct application of technical analysis is critical to becoming a money-making trader. Not just a successful trader, but if we're in this business as a business to make money, this is what we need to identify with. Learning the correct application of technical analysis can generate significantly higher percentage returns and minimize your risk by way of superior timing in your trading. One of the techniques we teach here is the correct application of Fibonacci retracement levels. When you use these in combination with time-proven indicators, it provides a level of accuracy that is unmatched. Now, these highly guarded techniques, once learned and put into practice, provide you with clear and actionable intelligence to help elevate your trading to the professional level. It will provide you with added risk management and will allow you to stay in the business year after year as a professional does. This is the key. Superior risk management to be able to trade with longevity. Learning these techniques will help you avoid the pitfalls of what I call substandard trading. You know, very small amounts of money. Not worth really taking these type of trades. So you'll learn how to eliminate these and go for the trades that have the potential to make the most amount of money in the shortest period of time. Now, technical analysis, learning this correctly, is the critical element of a smart money trading methodology. And it will guide you in selecting only the true high probability trades. The most important thing to understand in this undertaking, in this seemingly complicated venture, is that we need to keep things as simple as humanly possible, and so that when the moment arrives to take the trade, traders and investors, you have the confidence and the conviction, because you know these indicators inside and out. You know the correct application of technical analysis to be able to take these trades. Instead of following one system after another, after another, after another, and eventually just going from system to system or scan to scan without really understanding the mechanics of what's behind it. So it is markedly better and markedly more profitable to do the work yourself. If you're willing to do that, this is where it all starts. I believe if he can get here on time tonight, we have a special guest speaker by the name of Dave Osman from MetaStock. And the reason why I asked him to come is because everything that I'm going to demonstrate in this presentation tonight is all straight out of the MetaStock professional program, and you can replicate it. No special indicators, no special real-time scans, market scans. Everything that you're seeing tonight, you can get right out of the program without having to spend enormous amounts of money on things, again, that are extremely complicated. And the rules, where a parameter is a rule or number which determines the entry and exit of a position. The majority of these systems do not have these rules disclosed, so therefore it's really impossible to have faith in a system or a scan that you don't understand. This is what you do not want to do. You want to go with what you can understand by learning it and repeat it. So a quick explanation of what you're looking at here is a Dow Jones Industrial Average daily candlestick chart with the most recent data loaded. Dow closed today at 12,598. Now, what you're looking at is the volume in the subgraph below, a 21-period average daily volume in red here overlaid right over the volume. Very simple, very easy to see, and very evident when these volume spikes appear as time goes by over and above the 21-period average daily volume within the Dow Jones Industrial Average. Now, at first glance, it may not seem to provide a lot of intelligence. Let's back up one more space. Here we are. And if we look at market turning points and the volume as compared to these turning points, for example, this volume here as compared to this pivot point low was the basis, a new base level for a significant trend to start and move up. Additional buying here, okay, a sell-off here on the way up, smart money selling off. And again, here was the insider sell-off that I called on the IMA webinar that was presented in or around this time frame. So the volume as compared to prices is critical. And the reason why we need to understand this interrelationship between these two is because where volume is significant, like at these key levels, the effects of that volume and that quantity is a direct reflection of the smart money. These people are institutional players, market makers, offshore hedge funds, funds right here in the United States that have the ability to move prices from one level to another, from one level to another, one level to another. And so knowing this, understanding this, and being acceptance of this, we have the opportunity by making the relative comparison of volume to the price chart patterns to be able to determine when we need to be flat, to be in the market to be long, or to be short when the market turns back around. This is the way. So a simple volume in the subgraph below is where every trader should start to look at this relative comparison. What I have done is I have drawn a significant longer-term trend line from this outside bottom level here of this pivot point low to this one here. There were many that were drawn in between these two. For the sake of this example, this broadcast out to here and then broadcast out into the future is the example for tonight's presentation, because I knew that this volume here was a significant insider sell-off because I was watching the money flow, what we're going to get into shortly. And at this time, here, right on this day, on 4/4, this significant event happened where this trend line was violated and prices moved subsequently to the downside immediately after. Now that, taken in isolation, is something profound. Something that's very simple to do, but a lot of traders can do this wrong. It's how you connect, where you connect, from above to below, whether your bias is, in this case, short, waiting for this to get broken, and then be short here, or long again here. Again, the example is short here because of the insider sell-off before here. Let's also take note that we have a single top, a double top, and then a a third top here, okay? Here in the center point from this chart pattern, this was a little bit short of this area, but we do have 1, 2, and 3. So this we use in combination. The amount of price levels that cannot get penetrated again to the upside, whereas resistance is now where prices hit and turn back around again. I hope everybody understands that correctly. Any questions along the way, please enter them into the question box and I'll answer them, as many as I can along the way. And I do this because a lot of people are shy about asking. Don't be. Because the question that you ask might be the very question that someone else doesn't want to, but is, going to benefit from the answer that I'll give. Okay? Excellent. So here we are again with weak buying here after the short-term correction to bring prices back up to the triple top and prices sell off again. Why? Because the majority of the selling had already happened here. Now, the second thing that we want to look at is money flow, because we need to know what is behind this volume. Is it insider money coming in, or is it inside money moving out of the market? I need to be able to know every single day as a trader, what is the reality of the volume that I'm looking at? Is it something that can move prices to another direction into a higher level? Or is it that catalyst that can act as the reason why prices will trade back to a lower level? This is very important. You, as the beginning trader, the intermediate trader, even the advanced trader, always should keep ever present the significance behind substantial volume and what it can do to act as one of the most basic reasons of accumulation and distribution, what's really behind it to be able to trade those moves with confidence, because these people have made their move before us. And if we're trading with them, the probabilities are up to a percentage level that is so much higher, there is no reason to trade any other way. Does everybody understand what I've covered so far? A lot of hands going up. Okay, excellent. Thank you. We'll proceed on to money flow then. So after the volume, the first thing we want to look again at is the money flow indicator, or indicators in this case, to determine the reality of the money flow. Now remember, the trend line was broken here on 4-4. But if we look at the money flow index, a 14-period money flow index is my parameter for this indicator, right out of the MetaStock professional program. Okay, it's clear that money kept coming in all the way up during this uptrend, but what happened? Money started to come out here. Okay, and I did make some money on the short-term correction here. Those that were studying with me every day, we had talked about this at length. Here is a run-up of prices on inflated highs, and again here. But look at what the money flow indicator is saying, the direct representation of the real smart money that's behind prices. The money flow is on a negative divergence, and then again a secondary negative divergence as compared to this secondary high here, okay, which went from here to here, okay? A significant negative divergence as compared to the price action as a leading indicator, right, before the market turns back around to tell us what happened with the volume spike that showed up. And sure enough, it was a well-calculated sell-off, a systematic way that these people have to be able to sell off that the general public is not able to determine. Now we as traders, now we have this ability to see this, identify with it, and act on it. Now, after the negative divergence, right, because here's one price point as compared to this indicator level, prices move up, down, and up again, right? What happened after the negative divergence was just as important as the other top, the final top before prices had a significant correction, which we also capitalized, excuse me, on the way down. Money flow fell off completely. A sure sign that in between all of this, there was a lot of selling going on. The last amount of selling by the people who move prices. Okay? This is how to determine what's the reality of the future. And will give you the opportunity to be able to trade that future with a trading methodology that will find, track, and trade the smart money using the correct application of technical analysis to be able to trade the high probability trades. Here's another money flow indicator by Chaikin that I also use. Now, a lot of traders will trade with just one. I don't understand that, but I can guarantee you that the returns that they're bringing in with their risk to reward ratios, there's a very good chance that they will not match what you can do. And there's good reason for this, because they just haven't had the right type of education. No one ever really showed them the significance behind using two different money flow indicators. In this case, a 14-period money flow index and the Chaikin 21-period. And so the question becomes, yeah, all the questions are coming through, so why? And the answer is because of the chart patterns, where no two chart patterns are ever the same in their design, in their intrinsic makeup, you know, the ranges, the average daily true range, the the time horizon, the length of the patterns, the volatility, right, within the marketplace. Where one money flow indicator cannot give us a clear signal, the other one should. When we have confluence, confirmation, meaning between the two, well, that's where the rubber meets the road. And that is exactly where you get the double identity of the reality of what's behind the price action. Here's your significant divergence here. Your first and foremost divergence is prices thinned out here. And here is a secondary divergence right here from where we left off down to here. Okay? And obviously, here we have another one from where we left off here down to here. But all the while, especially after your double top here, it was very clear that Chaikin's money flow indicator, again, right out of the MetaStock professional program, had clearly, very clearly indicated to you that if you were here, it was time to be flat, or maybe even here, and not bother wasting the time and getting geared up to go short, because that was an eventuality that was about to happen. It did here, and as well, again, here. So now we have just seen the relative comparison between the price chart action in the very first chart with the volume in the subgraph below, the first money flow 14 period index as compared to the prices, and now the Chaikin money flow period. For those of you who joined us a little bit late, we did demonstrate a significant trend line that was established from here and again to this secondary level right here at this outer corner, and that trend line was violated back on 4-4, a intermediate to long-term trend line that had been established, and right after this trend line was violated, when using this technique in conjunction with the money flow, it would have been clear to all of you to be flat, completely out of the market here, or go short. Okay? What happens, traders and investors, is that your bias changes, your opinion. Your bias is literally termed, what is the level of your conviction for the market to be long or short? Here we teach 5 different levels. It's 6, 7, 8, 9, and 10. 1 through 5 is market net neutral, trending with a certain slope that is neither strongly trending upwards or downwards. Okay, a time to be out of the market per se. That bias changes significantly in this type of setup right here, in this type of chart pattern setup as compared to the indicators, right? Because we're looking for the area to be flat, or better yet, be short and make a lot of money in a short period of time, because prices usually move down a lot faster than they move up. You could have shorted ETFs here, any one of a number of financial instruments, to make just an incredible profit, and again here, in a very short period of time. We had a question that came in, what are the projection times on market direction? The projection times here that I will stand by are 3, 5, and 7 days. Any trader who says that they can predict with real reliability, with real certainty, what the market will do 7 days in advance is playing a very dangerous game. And we have a lot of very seasoned technicians with us tonight, very astute traders. And I have no qualms with saying that whatsoever. And the reason why, people, is because the longer your open trades are open from the point of entry, the higher the probability comes that you're going to give some of that money back, right? Because of market volatility, because of your instruments, volatility as compared to the market known as beta. The longer your positions are open, the longer your trades are open, the more risk there is. It was very clear to see there was a 3 to 5 day move here based on previous levels that were laid out on the way back down to get to. Okay, so let's take a look at another chart, and I want you to see something that as you go through this process and you identify these areas as compared to indicator levels, which is now very clear to see. You keep adding and you keep adding more and more, but only the time-tested techniques that really work in real-life trading until you have zeroed in on where prices will go in a very short period of time. So let's take a look at that chart, and here it is. This is where the insiders came in. Here's the volume pushing up. Here's a small sell-off. Here's the big sell-off that came in here. On 316, the insiders, the smart money, sell off here with significant volume spike. Now, if we blow this chart up a little bigger here, it's very clear to see that we have 1, 2, 3, 4 different data points. The close of this day, the open, the close and the open, where a seemingly invisible support line is drawn. However, look at what happens before the market sell-off. The trend line that was established that I already drew here, right, that we saw in the previous charts, intersects with the support level within the pattern itself. And subsequently, right at this intersection, this apex where prices moved into essentially, they had to go one way or the other, and they traded right down on the very same day, closed down. This is the real value of trend lines, not just for support and resistance, the intersection of both and how that interreaction allows us to be able to view in the moment, whether it's end of day like this presentation or real time, what the prices are about to do. And when we've tracked the smart money in conjunction with just a few of these techniques, we have the ability to really step on the gas, trade more shares, short or long. In this case, the example is short, or if you're trading the E-mini futures, what we're getting into shortly, there you have it. A way to go short and make 3, 5, 7 points or more within a very short period of time, within a day, because you know that this is where things are going. Any questions about anything I've covered so far? Okay. So that concludes the application of the volume money flow and just a few trend lines on the Dow side. The quick explanation of technical analysis for those of you who are new to technical analysis is simply this. And while I'm getting into this, I'll close this out and we'll open up the continuous contracts workspace. Okay, here we go. And I'll just refresh these to make certain we have the correct prices before we get into. This is another layout / workspace that was created in the MetaStock professional program, real time. It's drawn from the quote center side. And in this instance, we'll also take a look at Fibonacci as well. Okay. We do have a special guest with us tonight, Dave Osman from MetaStock. And I asked Dave to come tonight because I use one program to trade, only one. In the past, I used 2, sometimes 3. Now, I've For those of you who are new to me, I should explain who I am and what I really represent. I make my money from trading. That's it. All of my money is essentially generated from trading equities, and a lot of money is generated from trading the S&P E-mini futures. Okay, I have been trading every day using only technical analysis for the past 14 years to make my money. I took 3 years off from life. I studied. I talked to some of the best traders in the world, all over the world, and I interviewed them and I asked them what worked, what didn't work, what should I be doing. I met and had a key conversation with a head trader of a major institution in Boston, and he showed me what I needed to do in order to cut right through the chase. And his answer was, you need to create a trading methodology, Jeff, that can find, track, and trade the smart money. A trading methodology that is based on technical analysis that can quantify the true relationship between supply and demand, who's in control, and when that control is changing from one guard to the other. And so again, everything that I trade off of is just using this program. This is an incredible program. And all the indicators that I use to trade with every day, that I actually teach in every course or every extended mentorship program here, is all out of this program. So again, it can be as advanced as you want it, but the key thing in trading is to keep things as simple as humanly possible, so that when the moment arrives, you have the conviction and the confidence to take that trade because you worked for it. So let's do a quick sound check and see if Dave can hear us all okay, and we can hear him. Hello, Dave. Are you there?
Yeah, can you hear me okay?
Yeah, can you turn up your volume just a little bit, please?
Sure, how's that?
Yeah, that sounds great. Can everyone hear Dave? Can we get a raise of hands, okay? A couple of answers in the question area, yes?
Okay. Well, good. Well, I really appreciate the invitation today, Jeff. We've had a nice partnership with Jeff. He's got some really great methodology that we believe in, and it's one of the reasons why we enjoy partnering up with him. And the MetaStock program and the charting that you're seeing here, as Jeff explained, is all included as a part of the MetaStock program. And depending on your level of technical analysis, it sounds like we've got a mixed group here of some very experienced technical analysis all the way to some brand new technical analysts. And what's great about the MetaStock program, and what you may have already noticed, is that it's incredibly comprehensive. It comes with more than 200 trading systems, lines, studies, explorations, backtests, stock. And so, as Jeff mentioned earlier, it's not something where you're going to have to add on or grab another company to get one tool. It is a complete set of tools. In fact, let me give you a little bit of background on MetaStock. We've been around for more than 30 years. In the technology industry, that's a very, very long time. And in fact, last 20 years in a row, including this year, the MetaStock program was voted once again, 20 years in a row now, the best technical analysis tool set available to a trader. And so we're very proud of that, and it's because of a couple of reasons. Number one, we're comprehensive. We're going to give you every tool you need. It's going to be the most expansive and useful set of tools that you can have. And number two, it's entirely customizable. And so if you're going around and you're finding trading systems as you grow as a technical analyst, maybe a couple years from now, guess what? We're going to be able to import or even create systems that fit your needs. Now, that being said, having a great set of tools is very, very important, but if you do not know how to use those tools, they're not going to be very useful to you. That's one of the reasons why we really enjoy partners like Jeff, who understand how to use the tools and how to help you turn those tools into the right side of the trade and really getting success out of your technical analysis. And so we want to invite every one of you to try the program. We want to give you these tools. We want to set up a way for you to do that. We'll get you some contact information for us over here, and perhaps Jeff, you can leave some of that contact details as well. But we want to set that up for you, give you a chance to try the MetaStock Professional software. We can set it up for a full 3 months of the software and the data package provided through Reuters for the price of a single month. It's a special thing that we do simply for the benefit of Jeff Killian's students, and so we want to help you with that. Once again, my name is Dave Osmond over here at MetaStock. We'll leave you some contact details, and we can assist you with that. We want to give you a chance to use really what is the best set of tools on the market right now.
Dave, what's the telephone number for them to reach someone over there, please?
Yeah, the phone number in the United States and Canada is 800-882-3040. Again, 800-882-3040.
Okay.
And internationally, you can give us a call at +1-801-265-8886. Again, 801-265-8886.
888-6. Okay. Now, we do have an offer code, and it is Killian A.
It's really important that you mention that to make sure you get those 2 additional months for free.
Exactly. So the offer code is Killian, K-I-L-I-A-N-A, and I'm typing this in right now, and I'm going to broadcast it off to all of you, the offer code, to get the special pricing. So let me know if you can all see that. David Osmond, 800-882-3040, and the international number is 01-801-265-8886. Offer code is Killian A. This is going to go out to everyone. Can you see that now in the chat area of your program? There should be in the upper right-hand corner your small control panel where you can click on the chat area, and that should be visible. Yeah. Okay, we have it. Okay. So remember, traders and investors, MetaStock not only has the program, but the data that's behind it is critical as well. Thomson Reuters data is some of the cleanest data I've ever seen. And when you're trading off of prices, you know, we need to be trading off of the right prices. And this is another reason why I like this program. I've never talked about the program in this kind of length before. But as a new trader who's with us tonight, or even experienced trader for a long period of time, it's important to understand that there are critical things in a platform that you need to have in order to be successful as a trader. So anything else you'd like to add before we go, Dave? And we'll continue on.
No, I just want to reiterate, you know, technical analysis requires you to be a craftsman. And you need 2 things to do that. One is you need great mentoring. You need somebody who can show you how to do it. Jeff, you're right on the money. There's a lot of ways to do this wrong. You've got to have somebody who can show you the way and help you with that. And secondly, you have to have the right set of tools to get it done. And so, you know, give us a call. Let us know what we can do as far as getting you the tool set. But we're really pleased with and recommend highly Jeff's training for that reason.
Well, I didn't expect that, so thanks a lot. I appreciate it. Okay, again, Dave, thank you for coming. We're going to continue on.
You're welcome.
Okay. Please stay with us, Dave, and everyone. We have the continuous contracts we're going to get into right quick, and adding Fibonacci into your analysis to be able to determine support resistance levels and high probability price profit targets, and a bonus. Here, I want to talk about real quick the key practices of a professional trader. In using technical analysis, a trader will use technical analysis to time the market and identify what to trade and when to trade it for real profit. A trader will use trend lines to identify the true support and resistance levels, like I pointed out on the chart, which was otherwise invisible, right, before any trade is ever taken. He or she will always use multiple time-proven indicators, incorporating only objective analysis, leading to actionable intelligence to be able to take the trade. Now, objective analysis is obviously gained from technical analysis and is the preferred method used to quantify a correct risk-to-reward ratio, again, before the trade is taken. And technical analysis is obviously, risk management is the key to longevity in trading the markets, or especially the S&P E-mini futures market, and your key to a long-term career, because we do not want to start something that will not last. We want to learn it right. Like, again, building the foundation of the house before we build it, right? The foundation is super strong, so we know that our new home is going to last. Okay? So let's get right into these here. Again, on the S&P E-mini futures continuous contracts, which you're seeing right now, okay, an excellent market with a lot of liquidity for the individual investor and trader to be able to participate in. The smart money players are in here as well. What we do teach is going from the Dow, because of the volume levels that are not as easily identifiable, not as readily visible. On the S&P cash side, the 500 equities index, which is what we go to, and then right to the continuous contracts here. Okay, the chart patterns are similar but not the same. The uptrend is similar but not the same. But we do have advanced warning by the volume that's been selling off along the way up, maybe a little later, maybe a little earlier, depending upon how it's gone, right? But the markets should be trading in unison, and they're never far apart because they are connected. They are highly correlated and interconnected. So we go through the entire gamut of learning how to really analyze the overall U.S. markets and know where you stand every single day first. This is a key thing, traders, so that you know when a moment arrives, a high probability setup on the real-time chart side, like on the S&P E-mini futures, from a relative comparison to the end-of-day data points, chart patterns to the real-time, you can be sure from here to here there were a multitude of opportunities to be in and out short within a short period of time, racking up the dollars versus any other type of trading. Here, if we look at the money flow, in this case, on the Chaikin side, we had an intermediate to long-term negative divergence here. Not the same, but highly evident, as well as the Dow. The futures are highly correlated again to the Dow on the S&P cash side. So this is why when we're trading the S&P E-mini futures, the first thing we're looking at is the continuous contracts, because all the data from every contract month is rolled in, and we can make a substantial, clear, actionable analysis to be long, short, or flat. So here we have the substantial negative divergence as compared to the run-up on the prices on the Chaikin money flow side, and here on the money flow, another substantial negative divergence, and the prices totally fell off here with significant downward momentum before the prices tanked here and again here. I have the indicator blown up so you can see this very clearly here. Now, what I want to represent to you tonight is the relationship between Fibonacci, and I'm going to cut it out of here for a moment and reapply it so that you can see just how easily it's done in this program. Fibonacci, the law of nature, the law of numbers, has direct relationship to trading. Everything that you're seeing, all the indicators that I've used, have all been back tested in isolation. I didn't just come up with these within the last few years. These are the most time-tested indicators that I have been able to find after testing 40 out in isolation and then combining these all together to come up with a synergistic, depending on your accent, way to get a looking glass inside the markets and your trades to be able to take only the true high probability trades. In this case, the trades that we teach here on the S&P E-mini side are 3, 5, and 7-point price profit projections. And that is only when the end of day data points like here are all lined up, and the 15-minute charts, the mother of all real-time trading time frame charts, are indicating very similar but not necessarily the same negative divergences, in this case to be short, with a multitude of trades, full well knowing that the momentum from the end of day side is short. So you're basically in there cherry picking your trades, and you're looking for the 3, 5, and 7-point moves. This is what we teach here. With Fibonacci applied, insert here retracements from this pivot point level to here. You're looking for where prices may get to on a downside move. Okay, what can be the price projection to the downside, since the prices could not penetrate previous highs here and prices started to move down? It's going to be 23.6, 38.2, right? Maybe 50%. And coincidentally enough, prices moved down. They hit 23.6, and now the next level for them to reach is all the way back down, 38.2, as laid out by Fibonacci. Will they get that far? It depends on the market conditions, but the next real support level on the continuous contracts is right at this level, as determined by these 3 data points between opens and closes, which would be a little higher up at this level right here at about 1,307. Using Fibonacci in real time allows you to create a price profit target that can be counted on when it lines up with previous 15-minute price levels from the past. So, to sum up technical analysis, by definition, it is the study of price movements within price charts using trend lines, volume analysis, chart patterns, and mathematical indicators based on price and time to determine the current state of the security and the greater probabilities of its future directional movement. The 2 main methods to analyze securities and make investment decisions are fundamental and technical analysis. As we're aware, fundamental analysis focuses in on arriving at a valuation of something by using corporate data. They employ a lot of different models in hopes of determining an instrument's real worth at the moment in time. And then it will attempt to forecast a future price level where that security, that future, in a certain period of time, based on what the models have provided, will reach. Here's the thing, people. Those models by nature are extremely subjective. Well, it looks like maybe, I believe it can. In the real world of trading, that doesn't have application. What does have application is objective analysis. And that's why technical analysis is the preferred method to determine if there's a real opportunity or not. Because it is 100% objective, and it quantifies the true supply and demand of anything that you're analyzing, regardless of what the news or the fundamentals is saying. This is the key thing, people. All the news that's broadcast out there from CNN, I know traders that are paying $5,000 a month for news, is geared to confuse you and take you off track. So when the insiders move prices, they get the majority of the lion's share of money. It's our job to find them, track them, and trade them. And this is exactly what we teach here. Now, in the most recent past, there's been a lot of articles that have been written by myself in Traders World Magazine, stocks, futures, and options with live videos, major presentations, PFG Best out in Chicago talking about how to really trade the smart money, the essence of high probability trading, many, many webinars at PFG Best in Chicago, which were also broadcast out by Chicago Mercantile Exchange. CNBC, moneycontrol.com in India, we are there. We did a most recent 2 presentations at Traders World Online Expo. And again, we are an official partner in the trainer category in the field of technical analysis for MetaStock. Now, the last 2 courses were sold out completely, fast, and this course will sell out too. This is your opportunity to go through just like you did tonight in this type of webinar environment. 3 days, 2 sessions a day, fully recorded just like this to view on demand anywhere in the world via internet connection, or you can download the sessions and keep them for life. And I like that because I believe you should have ownership. The E-mini Professional Trader Training Course runs May 22nd, 23rd, and 24th. And so what I'd like you to do is I would like you to link through, let me see if I can get that in the chat area. We'll just punch in the InsideTechnician.com. And there we have it. And you can go right to the S&P. This is in the chat area again. Or you can just type it in if your computer, if you can't get through the chat area, to www. 3 words all run together, theinsidetechnician.com, and go right to the S&P Pro Trader course. We've held a special pricing. It's 3 days of very comprehensive, a very structured, learnable, and repeatable process to cut right through the chase and learn how to trade this incredible liquid market. You will learn, I guarantee you will learn how to trade only the true high probability trades. That's going to give you a level of confidence needed to take your trades when the trading moment arrives. The Superior Trading course is led by me, only by me, and no understudies. So I'm going to give you everything that I have. The good news is that we're in a fully transparent environment. We hold nothing back. So everything is fully disclosed so that you are able to replicate exactly the way that I analyze and trade the S&P E-minis every day for considerable profits, by the way. And so both the audio and the screen shared sessions like tonight are fully recorded, again, and you can review them on demand or via the internet, or however you like, whatever's most convenient. So if you have an interest in this opportunity, I would highly encourage you to take just a few minutes and go to the site, theinsidetechnician.com, and go to that S&P 500 Pro Trader Training course and see all the course details. See the special pricing that's still held, because next month this course is going up another $300. And this course is strictly limited to 10 attendees. That's it. No more. Because this way I'm able to give the type of individualized training and attention that sets us apart from every other educational source that's out there today. The first 5 receive a special Fibonacci video that I created, so this is the additional bonus. So before we end tonight, I would like to take a moment, and I would like to thank all of you for taking your time out. Nobody's time is free to join us tonight. We have an incredible opportunity in front of us to be able to change our lives for the better by learning how to trade. As the opportunities diminish, we have to create new opportunities for ourselves to be able to live the type of lives that we want and we deserve. And so trading can be the vehicle. It's a matter of applying yourself, taking the first step, getting educated properly from the ground up with technical analysis, and then applying that to your life every single day in order to arrive at a real-life profitable trader. We have over 45 full-time traders that have come through these doors in just the last 6 months. So there's the actual proof. So once again, thank all of you for coming with us tonight. This is Jeff Killian for the Inside Technician. We'll see you again on the next IMA webinar, and we look forward to all of you signing up and joining me for the S&P E-mini Professional Trader Training course that starts next Tuesday. It runs the 22nd through the 24th. Good night, everyone.